Hello everyone and welcome back to the second episode of how to do stock analysis using Python and Flask, right? So till now we have learned how we can fetch the data using Yahoo Finance, and you have also seen how to judge a stock using the daily returns, right? Today in this episode we will be learning about moving averages. Now moving average is a technical indicator that is used widely among traders, right? And we can derive a lot of strategies using moving averages. We'll visit one or two today, and next we'll be visited next episode. So yeah, let's start coding. So moving average, what is moving average? Moving average is nothing but average over a period of time, right? So let's say that we have 20 data points and we are doing a moving average of 3. Then that means that is the average of the first 3 days, then slide it one window, and the average of the next 3 days, again slide it one window, average of the next 3 days, and so on. So I will show you how it works. So let me just define a function, say ma, and this will have two arguments, df comma period. Okay, now period and return. Now period is the number of days on which we want to actually have the moving average of, right? Df of close dot rolling, and it's a period dot mean. Okay, so this is the rolling mean or the moving average function. Now let's first check the data frame. So let me just pull it up again, complete data. So so this, you are already familiar with the data, how it looks and how we can make it work, right? Now we will just give, say, let me first show you how it looks, right, with a 3-day moving average maybe, and ma will give df as a parameter and period equal to 3. Now if you see, and let me just show you the closing price and the 3-day moving average. Okay, if we see this, you will see that the moving average, the first two values are none. That is because the moving average is starting from the third period, right? 3. So this is the average of the first 3 values. If you average this out, this is the result you will get. The next one is the average of the next 3 values, that is from starting from this to this, right? And so on, right? It will go on doing the average. So that is how moving average can be calculated using pandas. Moving on, we will first let's plot the closing price and plot and legend. True. Okay. This plot is too small. Let me just give it a bigger scale. So plt dot figure dot fixed size. Let's give it 16,8. 16,8. Okay. Now the figure is much more visible to us. Now let's calculate a 50-day moving average, and this will clear you why we even use moving average in general, right? So moving average is a very good way to understand the trend of the data. Okay, so how the data is trending. So here, if you can see the chart, and let me just magnify it for you, right? So if you can see the chart, you see whenever there is a bearish trend, the moving average is also going downside. Whenever there is a upward or bullish trend, it will also move in that way. So even if you don't see the close price, we'll get a pretty good idea about the trend line. So this is the trend line. But there is a major issue when we are using moving averages and with a small term or short term moving average. That is, it is very sensitive. It is very sensitive to the data. So you see there are a lot of fluctuations here which is occurred due to the data fluctuations in the stock market, right? Now one way to handle this is to go for a higher uh, period moving average. So say if we want to go for a 100-day moving average, okay, and let's plot that out as well. 100-day moving average. Okay, sorry, I forgot to run that. So you will see that the 100-day moving average is much more smoother, obviously, okay, but also it is less sensitive to the fluctuations points. So if you see now, the small fluctuation that we saw in the 50-day moving average is no more, right? It is giving us quite a good trend of how the data is flowing, or how the trend is going for this stock. So if we just plot the 100-day moving average, we get a pretty good idea about it, right? But still it is sensitive to somewhat sensitive. So let's go even for a higher period. Let's go for a 200-day moving average. Okay, 200-day moving average, and sorry, so yeah. So now here you can see the data is much more cleaner, the trend is much more clearer, okay. And if we plot it with this one, you will see that whenever there is a bearish turn, the moving average slope goes down, okay, and for smaller changes it stays relatively flat, but for a huge change it gives us a trend line, a very proper trend line, right? So in this way we can use moving average to judge the trend of in which it is on the stock is moving, okay. But again there is the issue that it lags, the data is lagging. So if you see that this data is going bearish, but the moving average trend is a bit slow in getting there, right? Because we have used a 200-day moving average, so there is a lag between that, the trend line and the actual data line. But here is where the trick comes up, right? We can use a short-term moving average and a long-term moving average together to create a signal, or to find out when is the best time to buy or sell a stock, okay. So in general people use as a rule of thumb a 50 and a 200-day moving average in this strategy, okay. You can use whatever you want or whatever fits your need, and later in this course we will also learn how to evaluate how much like if this strategy is very good or not, okay. Anyways, moving on. So now I have given given this chart. Let me close this so I should close one. So here the blue line is a 50-day moving average and the orange line is a 200-day moving average. So the idea is that if the 50-day moving average, okay, is greater than the 200-day moving average, like this one, right, or here, right, this point says a sell signal, okay. So basically the data is moving on a uptrend, right. On the vice versa, if the 50-day moving average is lower than the 200-day moving average, then it's a buy signal. So so basically the price is going down and we should buy some stocks, okay. And let us calculate and see if this strategy even makes any sense or not. So let's give df dot signal, and here in give in p dot where df of 50 moving average greater than of 200 moving average, will give df dot close dot max or -1. So if it is if this is true, this condition is true, then the value will be the maximum close price, else it will be -1, okay. Now let's plot this signal as well. Okay, now as you can see here, right, So let's take this part. So here you can see that the 50-day moving average is way over the 200-day moving average. So that's why it gave a sell signal. But previously, as the blue line or the 50-day moving average was lower than the 200-day moving average, it was giving us a buy signal. Okay, so this is how we can check if it is a good time to buy or sell a stock, right? Now this is one of the indicators, and there are much more we can use, right? And we will use multiple indicators to understand if it is a good time or not, and we'll do it very soon. But yeah, this is a general idea. So let's just do one last thing before ending the video, right? So we'll take this, and instead of max we'll say sell, and -1 will give buy. Okay, now we'll check data frame, check the data frame. So in this way we just generated the signal buy or sell signal for this, for the data, and we can use this buy or sell signal to see what we are going to do. In this here, if you see, it just in the last time it is giving us a buy signal. So this is a good time to buy a Vodafone stock, right? And I think, yeah, that's it for this video. And in the next video we'll learn about moving average with indicator and moving average contrarian indicator. These are two indicators that can be derived from moving averages, and we'll learn this in the next video. Thank you, and if you like the video and learned something from it, please like, subscribe and share.